Hello everybody and welcome to our news digest. I'm your host, Sabrine, and in today's video we're checking out all the stories that made financial news in the middle of June. But before we get started, make sure you have subscribed to the IQ Option YouTube channel with notifications enabled. And don't forget to click the sign up link in the video description where you can enhance your trading skills by trading on a demo account of $10,000 in virtual funds. Okay, let's dive in. Worldwide inflation triggers fears of a global recession. It's been the prediction that economists have been screaming for months, but recent inflation data suggests we may be headed for a global slowdown, not seen since the global financial crisis. While not all experts agree, there are some troubling signs. Central banks around the world have stepped up their efforts to cool rising prices with a range of monetary measures. The US experienced its biggest ever cash interest rate increase in almost 3 decades, while Switzerland hiked rates for the first time since 2007. This is on the back of 5 consecutive rises for the Bank of England. The flow-on effect has been pronounced as investors worry about energy shortages, the impact of China's zero-COVID policy, and the conflict between Russia and Ukraine. Markets have tumbled in response. The Nasdaq and S&P 500 index have fallen into bear market territory of 20% from their peak earlier this year. But when it comes to the trillion-dollar question, are we headed for a global recession? The experts are divided. In an interview, US Treasury Secretary Janet Yellen recently said that US recession is not inevitable, although inflation was unacceptably high. Former global strategist and head of research of Morgan Stanley, David Roach, doesn't believe a global recession depression is likely to happen. Citigroup's chief global economist Nathan Sheets estimated that the odds of global recessions are at about 50%. Then you have Deutsche Bank chief US economist Matthew Lazzetti. In a note to his clients, he expected a US recession in 2023, followed by global contraction throughout the whole year following. So, not even the experts can agree. The only thing that will tell is time. Bitcoin hits lowest levels since November 2020. Bitcoin suffered dramatic losses in the third week of June, dropping by the psychological barrier of $20,000 for the first time since November 2020. At one point, the world's oldest cryptocurrency reached a historic low of $70,786.59 before rebounding to hover around $20,000. It's come amidst a wide-reaching capitulation of crypto markets, Ethereum, Solana, and XRP, all notching considerable losses. Well, normally such declines invite a wave of buying action, the so-called buy-the-dip strategy, but investors are cautious, even worried, about the wide economic conditions and the US central bank's monetary policy, less favorable for assets than they were during previous downturns. Netflix woes continue. Bank of America adjusts price target. The world's largest video streaming platform, Netflix, has had a rough time recently. Not only did they announce a negative subscriber growth count for the first time in their more than 20-year history, but they also in the news for shedding a massive number of staff and cutting back future spending. It's resulted in their share price tanking, hitting levels not seen since pre-2017. Well, it looks like the bad news keeps coming for embattled streaming giant, with Bank of America this week lowering their official price target of Netflix shares to $196 from $240. This new price target is almost 10% away from where the stock price closed on June the 22nd. They've maintained that if a recession is on the horizon, subscriptions to the service will be among the first things people drop when trying to lighten up household spending. Airline stocks tumble despite record travel numbers. After the past 2 years, packed airports are a refreshing sight. Yet not everyone is smiling, particularly those who held Blue Ribbon airline stock of recent. Despite the full flights, bustling terminals, and packed airport lounges, airline stocks have been underperforming right along with the rest of the market. American Airlines hit its lowest share price since November 2020. It's the same for Southwest, Delta, and United, who each touched two-year lows last week. It's come in the middle of trifecta of issues plaguing the industry. There are record labor shortages, including that of pilots, who have been struggling to keep up with the demands. Summer flight cancellations due to weather put an increasing load on a system already at capacity. This, paired with the record high fuel costs that make absolutely everything more expensive, ended up being added to the ticket prices. Despite all this, most US airlines predict a return to profitability by the end of the year as demand makes up for the time lost across the pandemic. Against the curve, the Amazon stock rebound. Despite shedding 36% this year, market strategists are convinced an epic rebound is in store for the tech and retail giant. Growing revenue within their cloud services, further tech advancements, business acquisitions, and a rapidly expanding retail delivery footprint means that a lot of investors are extremely bullish about the future of the business. Many speculators see an impending recession as a golden opportunity for Amazon to acquire other businesses. Max Westerman, founder and senior portfolio manager at Miramar Capital, says that the weak players running out of cash are going to be bought, and Amazon is in a prime place to absorb them at much cheaper prices, he said. Celsius implosion. Was this a Ponzi all along? At one point, crypto DeFi lending platform Celsius was one of the largest of its kind. It managed tens of billions of dollars of crypto assets and provided a yield exchange service that seems too good to be true. Today, all withdrawals are frozen as the once shiny new DeFi platform looks set to implode after a liquidity crisis. From the beginning, Celsius and its wildly boastful CEO Alex Mashinsky had faced criticism over both his business model and the tokenomics of the entire portfolio. It was a system that seems to generate value out of thin air, while Celsius allegedly used the crypto deposits to place short and long bets on the market. In an interview back in November 2021, Peter Schiff, an American economist and stockbroker, called Mashinsky's Celsius platform a Ponzi scheme. Alex laughed it off and tried to deflect, but he didn't do much to address the yield concerns that were put to him. And this was just weeks after their CFO, Yaron Shalom, was arrested for being part of a crypto scam that defrauded people out of millions of dollars worth of cryptocurrency. As of today, Celsius maintains that it's working to free up everyone's assets, but they're currently under attack from multiple bad actors as per the customer support line. Elon Musk sued by jilted Dogecoin investor. As crypto winter descends upon the markets, some investors are taking their losses out against some big-name celebrities. In a complaint filed in the federal court in Manhattan, Keith Johnson claimed that the Tesla and SpaceX CEO, Elon Musk, was guilty of racketeering over his support of crypto joke Dogecoin. The complaint alleges that the eccentric billionaire purposely prompted Dogecoin to drive up its price before taking profits and letting the price fall again. Johnson is seeking $258 billion in damages, equal to around 3 times the amount of market cap Dogecoin had lost by the time of filing. But Musk isn't the only target of lawsuit aimed at celebrity crypto ambassadors. A class action lawsuit is underway against the cryptocurrency Ethereum Max and the celebrities that endorse it. This includes superstars like Kim Kardashian and boxer Floyd Money Mayweather Jr. Even Matt Damon's come under fire for his shilling of Crypto.com, just months before one of the biggest market downturns crypto has ever seen. So, despite all the doom and gloom, there are still market opportunities you may take into consideration if you do your research. Want to know more? You'll just have to watch the next episode here on IQ Option. But as for us, that's all we have time for in today's video. Thank you so much for watching. If you learned something new, or even if you just enjoyed my voice, it would mean a lot to me if you hit that like button below. If you like what you saw and you want to keep updated every time I upload a new video, go ahead and click that subscribe and notification bell as well. And don't forget to click the sign up link in the video description, where you can enhance your trading skills by trading on a demo account of $10,000 in virtual funds. See you next time. Bye!